Deepak is buying a house by taking a loan from the bank. Now, bank officials reached his house with a loan agreement kit to get it signed. Deepak signed about 60 pages of documents without even thinking. Later, it was found that along with the home loan, 3 insurance policies with a single premium of 1.1 lakh rupees were also sold to him. Due to this, his EMI of the loan increased by 965 rupees. This amount will increase his payments by an additional 2.31 lakh rupees in 20 years. Whereas, Deepak already has a term insurance cover of 1 crore rupees. Now, if you're taking a home loan, then like Deepak, do not blindly sign the documents without reading, because home loan agreement is a document that binds the bank and the customer in the terms and conditions related to the loan. Now, once the customer signs the loan agreement, then it is not easy to go back on it. Hence, take your time from the bank to read the agreement and sign only after careful scrutiny. Now, let us understand what are the important points to be considered before signing the home loan agreement. Now, usually, home loan has a long tenure of 10 to 20 years. The loan agreement contains details about various charges, like for example, provision for penalty and interest on missed EMI, etc. There could also be some innocuous seeming conditions, such as if the house is given on rent or lease without informing the bank, then the bank can charge a fee. If you have switched your job and started living in another city, you may need to inform the bank about it. If you do not do this, you may have to pay a fine. Similarly, if you change banks to pay EMI, then you may still be charged. Remember, banks do not charge any fee on the prepayment of floating rate loan. If you're taking loan to prepay fixed rate loan, then the details of the fee may be mentioned in the agreement. Take time to read such conditions so that you can plan well in the future. Usually, when the borrower does not pay the EMI on time, the bank declares him a defaulter. If the EMI is not paid for 90 days, then the loan account is declared as an NPA. However, there are some other situations as well when the bank can declare a borrower a defaulter. What are those? First, if the borrower dies or if the husband and wife are joint applicants, then there is a divorce all of a sudden. In such situations too, the EMI can stop. Read such terms in the agreement carefully. If you are taking a loan from the bank on floating rate, then its interest rates will be linked to the external benchmark, which is called as the repo rate. Now, due to the change in repo rate, home loan interest rates will also keep increasing. This change happens on a quarterly basis, although this rule may vary from bank to bank. This clause, of course, is included in the agreement. Some banks reset their interest rates immediately after the change in the benchmark rate. Now, in the agreement, you should find out on what basis the interest rate of the loan will be changed. Speaking on this, former banker and founder of Loans for MSME, Amit Kumar Tanwar, says that if seen in a true sense, the bank has a one-sided agreement for home loan. The customer does not have much rights in it. Moreover, the language used in the agreement is very complex and it is not understood even by the most educated people, let alone by the common people. The right way to avoid any fraud is to thoroughly understand the terms and conditions of the agreement with the executive who signs on behalf of the bank. Now, during this time, understand about the different types of charges related to the loan. If you find something wrong in it, then ask for removal of that clause. Negotiate to reduce the insurance plans that the bank is selling along with the loan. Through this initiative, you can avoid frauds and also make huge savings in the long run.